All right. Sorry, I was a little late after that. Literally, as soon as I sent out the message, my daughter woke up. So today might be a little bit quicker of a session, um, but that's okay. She's pretty calm right now, so we'll see if she can stay that way. Let's start off talking about what happened with the market, and then we will go over the $500 challenge, as well as where the market might end up going into next week. So last week, we talked about these levels here, right? All the way up to 4,600, the 100 period simple acting as resistance. And then this 4,300 in particular is what we talked about last week, and whether or not we could hold this throughout the week as support. In reality, for the majority of the week, we never even got up to the top of this range, right? Basically 4,400 continued to act as resistance. The one day that we got a little bit above that level, we went right into the 30 period simple, held it, actually made a strong bearish divergent bar off that level. And of course, in an overall bearish trend, that's a good sign that you might get a follow through on a lower low, which we did that next day. We actually broke 4,300. But if you were watching on the intraday charts, right, we weren't able to really hold below that level, right? We tried to trade a little bit below it, basically bounced back up into 4,300, and then that continued to hold us support, and we closed very nicely above that level, actually. I thought we were going to get a pin there, so I tried to do a challenge trade, a lotto challenge trade, which I alerted out towards the end of market Friday. But what you probably ended up seeing, right, was some short covering happening, some people taking profits right before the weekend, and in turn, that caused that bit of a bounce there to go into 43.28 into the close of the week. So overall, right, and we can look at this on a weekly chart too and get that bigger picture point of view. But what can we maybe anticipate for next week? Well, fortunately, unfortunately, right? If you're wanting this market to move, it hasn't quite happened yet. We're still in that decision point of, does 4,300 continue to hold? Because even though it has, right, it does continue to hold support, we're not necessarily getting a strong bounce off of that level, right? We just kept going into 4,400 and we weren't really even able to break above that to even try and go to 4,500 or up into the resistance here around 4,600 or higher. So when we look at our lower indicators, we can see that consolidation is still the key here, right? Momentum's going back towards the zero line. This is still a choppy signal overall. We got a little bit of a clue that we'd go up and test resistance. That's exactly what we did. And then it broke back down. We canceled out of that signal. So usually that either means that we're going to continue to chop or we'll actually see another run to the downside. When we take a look at the weekly chart, right? The weekly chart certainly has some bearish sentiment in the sense that we made a bearish divergent bar for the week, right? So we know that there's that possibility that within the next several weeks that we could see a low back below 42.79 and 54 cents. That's a good possibility. We also know that the compound breakout tool is still showing that bearish sentiment for a move lower down into support. Now maybe support is one of these psychological levels, or maybe it's working its way down to the 100 period simple. A little hard to tell at this point because we're not able to break 4,300, right? And as we can see for the open and closes of these bars, 4,300 has maintained trying to hold overall support. On top of that, back-to-back divergent bars are a sign of consolidation. So even if we get the lower low, it could bounce back up and still kind of hang out in this range. Even though momentum's crossed below the zero line, what was kind of surprising last week is we already started to get a green bar. So when momentum barely dips below the zero line like this, if we start to see it break back above the zero line, that actually usually leans more either to consolidation or a bullish trend, right? Oftentimes when things reset, sometimes you just get a little bit of a move below the zero and then it pops back up and then you actually go back into a bullish run. Now, there's a lot of things weighing on this market geopolitically, right? Interest rates, inflation, all that stuff is kind of weighing on the market. So I don't necessarily know if we'll go for the bullish run. But there's still a lot of signs that we could at least see the chop. Certainly, we have a great weekly squeeze building up. And of course, the question remains, is this going to fire to the downside and maybe bring us towards that 100 period simple and in turn towards 4,000? Or are we going to see that the 4,300 level continues to hold and we find ourselves bouncing back up and maybe this squeeze continues to build for a squeeze to the upside, right? That's still a possibility. When we look at the overall moving averages, for the most part, they're still overall bullish. The 10 is just now starting to cross below the 30, so it's in line more with chop. But if I were to choose a direction right now, the fact that the price is still well above the 100 makes me lean still to the bullish side of things, bigger picture. Now, that doesn't mean we can't see a continued pullback. We've talked about that 4,000 level before, right? Right around 3,900 to 4,000, 4,000 being a very strong psychological level, and then 3,900 being support both on the monthly and weekly time frame. Um, Keep in mind on the monthly chart, we still actually have a bullish divergent bar last month. Now, once again, this is a monthly point of view. So if you take the 3-bar rule, that means within the next 3 months, we could see a move back above 45.95, right? Towards that 4,600 level of resistance, which on the daily chart isn't too far away from the 100 period simple and the ATR trailing stop. So that's kind of in line with one another. And keep in mind, I know I've talked about this before on here. I know I've talked it certainly at Simpler Trading. But even if we get a pullback down towards 3,900, let's say 4,000, overall, this is still very much a bullish pattern. And it wouldn't be too surprising for this year even to get consolidation, which would allow momentum to help reset back towards the zero line. Because this was, certainly chugging away. We started to see red bars try and print since last October. So we already knew that we could start to see the tops here, right? Exhaustion levels. And so it could very much be a year like this, right? 2015 going into 2016, where there was just a lot of chop, right? But we never really saw a strong pullback or certainly a sell off into a bearish trend. So that's just the thing that I want everyone to be mindful of overall is that, this is a pretty, even with everything weighing on the market in terms of news and everything else, from a technical standpoint, this all makes sense. And if anything, is a healthy move for the market, because if we can have things reset, that could make for some great buying opportunity for us. And also it would help reset things for the next longer term bullish run. So we'll see what ends up happening here. For myself, the levels to watch into next week have narrowed themselves down, of course. So support 4,300, I still want to see whether or not we hold that overall for the week. Certainly it doesn't mean we can't break below it like we did back here during the week. But certainly into Friday, I want to see whether or not we're above or below that level. That's to me going to help me figure out, okay, are we reversing down towards 4,000, right? Or that 3,900 level, or is this still holding us support and we could work our way back up into resistance? Short-term resistance currently is at 4,400, so only 100 points away. We need to confirm whether or not that's going to hold as resistance, if the 30 is going to hold as resistance, or if we can break above that for that overall move back up into the first target, of course, being 3,500 as a psychological level, but really back up into this range here around 4,550, 4,600 to test where the prior highs kind of stalled at, as well as the 100 period simple and the ATR trailing stop. Certainly momentum's getting a nice reset. So of course the question is, does it keep going for a bit more of that bullish move, or is it going to start reversing over for a reversal here to where we potentially get a lower low right in the daily bearish trend, which has been confirmed now. So on the daily chart, we're definitely going more into a bearish trend. But the question, of course, right, is how much more does this go? So those are the levels I will certainly be watching into next week and being mindful of. And those, are the levels I'd continue to watch in here. Now, this isn't a trade I have been doing in the $500 challenge just because it's usually a little bit more expensive for the cost that I like. I might consider doing it on SPY. If it makes sense, I'll look at that into next week. But for those of you who haven't, maybe aren't in the simpler trading rooms and haven't been taking advantage of the volatility in this market, one way to do so is to actually do broken wing butterflies, very much like we've done on Amazon, right? But to do them on both sides of the market. So next week, what you could consider doing is doing a broken wing butterfly at 4,400, right? And a broken wing butterfly around 4,300 for the pin. That way, if you get a volatile move, which has not been uncommon in this market, given where the VIX is at and everything else, then you save yourself that protection because it's a broken wing. It's not a standard. So if it goes completely in the money, it still allows for that profit potential. But if you also hang out around either resistance or support in those levels, right, and you're hanging out in turn by your pinch strike, that could allow for a very nice profit to take advantage of. And when you get a choppy market like this where you're just trading in a range, it's not hard to take a profit on both sides of those butterflies, right? You find yourself maybe at resistance early in the week, you take that off, especially if it looks like it's holding, and then potentially see that reversal down to 4,300 to where you can close that out as support, or vice versa. And then, of course, if it starts to really break one level, that's fine. The idea is you take enough of a profit on one side to completely cover the risk on the other and still net together something, positive overall for the account. We've been doing that quite a bit in the Profit Recycling Mastery, and it's been working out quite nicely, but I tend to do it more on SPX because, of course, I like SPX. It's cash settled, so it gives us a bit more of that flexibility. But it's a bit expensive. Usually, I'm paying anywhere between $2.50, maybe $3 when I'm doing something like a 10 point broken wing butterfly. So, that's about like half of the account risk in here, which isn't to say we still don't have enough capital to put on a new trade, but it just makes me mindful. So maybe next week in turn, what we'll look to do is something similar, but we'll do it on SPY where we have the flexibility of a smaller spread width and in turn a cheaper capital cost, maybe something like this as the idea. I don't know if I'd choose these strikes in any way, so please ignore the strikes, but I'm talking about the risk factor, right? So maybe 41 cents, 250 for the pen. If it goes completely in the money on this, this is well, maybe we do 4, but something like this. So 4.2, so it's 75-cent risk. If you get the pen, it's 3.25. If it goes completely in the money, it's still about $1.25. And then ideally, of course, the cost on the other side is around as similar to a smaller risk cost basis. So in turn, right, if one side or the other goes completely in the money, it still nets for an overall profit for your account. So maybe we'll look at something like that to do in the challenge account if I can find the right risk versus reward, right? If it makes sense on the capital. Otherwise, what we've been doing in the challenge that's really been working, other than our SPX loser, if you did take that lotto trade this week, we've done 2 Amazon trades last week, which worked out quite nicely. So let me find where that is. There we go. So we put this on towards the start. Technically, it was in February, right? The 28th at the start of the week, the last trading day of February. And we opened this as a debit spread, a 10-point debit spread at a 222 risk. Now, certainly not a bad risk versus reward there. When I put on this trade, it was because at the time this was making a bearish divergent bar off resistance. And so that usually allows, within 3 bars, so on a daily chart within 3 days, for a bearish move to the downside. Instead, what ended up happening is literally right into the close, the market really started to bounce. In turn, Amazon started to bounce with it. And so it didn't actually print the bearish divergent bar. And so I know I talked about this at Simpler Trading, but I was like, okay, I'm going to watch this trade because technically the signal that I was looking for did not remain valid into the close. That's usually why I open trades into the close in general, because if I'm basing it off of a divergent bar, right, I want that probability that it's very likely to print. This is one of those few times where I put on the trade and I didn't actually get the follow through on the print, which is a little annoying, but it is what it is. So I mentioned what I'm going to watch here throughout the week is in particular the hourly chart. And in response to that, the price versus the 100-period simple. As long as the price can maintain below the 100, to me, this looked like a good chance that we could still follow through with resistance off the daily chart and in turn try and lock in a profit on this trade. Now, we did sit through some consolidation, but you can see here, back here's Monday, right? For the entire week, we still remained below the 100. Had a little bit of a pop here on Thursday, but that's actually when we took our profit because it started to sell off nicely into the close. We started to see this squeeze here on the hourly chart. Looked like it was probably going to fire to the downside at that point. And then when we go back to the daily here, the daily, uh, yes, the daily here, Thursday, started to also make a bearish divergent bar, which is actually the signal I was looking for on Monday. So what we ended up doing, and you might have just held this trade, right? You could have just done that, or maybe you opened both of the Amazon trades that I took this week and held them at the same time. But what I decided to do is I decided to go ahead and close that out for a profit. So I took the quick profit at $1.11 and locked that in for the account at 50% return on risk, right? Certainly not bad. But then what I did is I opened a broken wing butterfly with strikes a little bit lower, hanging out around 2,900. And I did this for $1.50. This too was a broken wing butterfly, right? So the idea is it gives us that flexibility that if Amazon really sold off on Friday and ended in the money, maybe went down towards 2,800 into that support level, then we would still be profitable on this trade. If it hung out by 2,900, right? Well, then that works best for us. But the reason why I did that is because instead of having 222 of risk out there, right? What I did is I locked in a profit and then I opened a new trade. When you net everything together, and let's just keep math simple. So even though I technically took like $1.11 on this trade, let's say I just took $1 profit. So the dollar profit here versus the $1.50 I'm putting back in means technically for the week, I'm only put at this point about 50 cents of risk left in Amazon, right? 50 cents of risk to me is much better sitting out there than $2.22 of risk. So don't be scared to take profits, right? Don't be scared of locking something in because you can always set yourself up with a new trade idea if you still really like the chart pattern. And in this case, I loved Amazon's chart pattern on Thursday for that move lower because, of course, as we know, what we've been doing in here this year is we've been usually selling Amazon Thursday into Friday because for the most part, right? For those of you who don't know, Amazon typically sells off on Fridays. From Thursday's close into Friday's market at some point in the day, you usually see Amazon has moved lower than Thursday's close, whether it ends up being a red day or not, right? Sometimes that's a hit or miss. But for the most part, you usually see profit taking from the bigger hedge funds at the end of the week on Amazon. And in turn, right, that's why that dip usually occurs in the price and it usually moves lower. And so to take advantage of that probability, right, we've been doing bearish broken wing butterflies on Amazon to be able to lock in profits there. On top of that probability, we also made a bearish divergent bar off of resistance levels at the moving averages. So for me, I liked that possibility that the divergent bar would get that immediate follow through, right? Especially when we see that on Thursday, going into the close, we broke the ATR trailing stop on the hourly, which was holding as resistance. We're confirming that the 100 period simple, the ATR was holding support. So we broke that, turned it into resistance. The 100 period simple, we continued to hold as resistance. And this hourly squeeze was starting to fire to the downside. So all of that, right? What we were seeing on the hourly chart with the Bollinger Bands, with the momentum, the bearish sentiment here, combined with the bearish sentiment into the close on the daily chart, and of course that probability that Amazon was going to sell off, all of that lined up beautifully. So I totally understand if you decide to hold the trade, right, the vertical spread, or if you decide to put on both at the same time. But the idea behind the $500 challenge, of course, is to really teach y'all about risk and to be mindful of risk and to show you that you can trade in a very small account and still lock in profits overall. And so that's what we did, right? We reduced our risk basically. So instead of holding 222 of risk out there, or even more risk, right? If you held both trades at the same time, you're holding about 372 out there of risk, right? Which still isn't bad for a $500 account, but it's quite a bit of risk for that amount of money. So instead of holding that much out there, we took the profit here and basically overall reduced our risk on Amazon for the week when we opened that butterfly. And in turn, we closed that out at 350. Amazon, for the majority of the day, hung out around 2,900. So if you guys held it longer into the close, which I mentioned to the alert, you might have been able, or you probably should have been able to get a better profit than 350. It did bounce right into the close, but obviously, unless you want shares assigned to you on Amazon, you wouldn't have held that trade that long. So hopefully all of you were able to lock in that profit. But in total on Amazon, we locked in about a $311 profit. So for me, I was okay putting on the lotto trade. Now, like I said, profit taking at the close, right? Some short covering. I ended up losing on SPX last week. So if you didn't do the lotto, it worked out very nicely. But we're still up overall for the year. When I look at the account like this, I'm like, Allison, I really either need to just put on the broken wing butterflies because in our mastery account, SPX has like been beautiful for the year. And then I look at it here and I'm like, such a loser here. So I either need to do the broken wing butterflies here instead of just the fun lotto trades, right? Or I just should maybe just stick to Amazon because that's just been working out so well. So obviously, what I'm also doing just to round out the session here, going into the end of it, is I have been waiting to try and find some potential buy signals in this market with the true low indicator, which we've gotten here on some individual symbols. But the key thing to remember about this indicator is you really want it to appear on the market, right? Because when the market's selling off, most things are selling off, right? There are certain sectors that are working out quite nicely. But outside of those sectors, right, the majority of things sell off with the market. So you really want to wait for the market to start showing true lows. Now, on the Qs and RUT, I've slowly started to see this indicator appear on the weekly chart. The last time we saw this indicator appear was during the pandemic lows. So I'm slowly keeping an eye out on this, but I haven't gotten it on SPX yet. It tried to print Thursday of last week, didn't quite get the print whenever we got this stronger bounce up. So maybe we see a little bit more of a dip in the market. That's why I'm trying to remain patient. But if we start to see the Bollinger Bands flatten out, if 4,300 holds on SPX, given that we have the true low printing on some other time frames, we might start to also look at some longer term bullish trade ideas for the mastery if it makes sense capital wise. So I just wanted to prepare you guys for that. But those are the things I am watching. Otherwise, I think the main way to trade this market is either continue to do profit recycling on the intraday charts, right, or some day trading, or to keep playing both sides of it, play the chop, but do so with strategies that build in that forgiveness factor in case you really see that stronger volatile move finally break one direction or the other. So thank you guys for joining me. I hope you have a great rest of your Sunday. I'm sorry it wasn't a long session. Like I said, my daughter woke up right at the start of it, so it was going to be a quick one today. But I'll continue to look for trade ideas to post throughout next week, and then I'll be back on next Sunday to see what happened throughout the market last week, and we'll look again to see what might happen into the following. Have a great day, guys. May the trade be with you, and I'll talk to you next time. Bye.